Most of you guys have been requesting more explanation on major versus minor inducement, and so in this video I'll be explaining it in the simplest way possible. And so without further ado, let me dive in. So starting with inducement in general, what is inducement? Inducement, abbreviated as IDM, in a bullish scenario is the liquidity resting below the low of the recently formed valid pullback. The keyword here is valid pullback on an impulsive move. So taking this scenario, this one here is an impulsive scenario. We can clearly see, I hope by now you all know this, that once price has taken out the inducement, in this case it doesn't matter, it can be a minor inducement or a major inducement. Once price has taken out the inducement, this high right here becomes a swing point, like a valid swing point, such that once price reverses now and breaks past this high, then this one here is a confirmed valid bullish BOS, that is in a bullish scenario. This means now we will be in a new trading range as well as a new impulsive move. So right here we can clearly see the definition. We say that it's the liquidity resting below the low of the recently formed valid pullback on an impulsive move, and we have just identified our impulsive move, and we know it starts from here and currently ending right there. So right there, which is now the recently formed valid pullback, we can clearly see that the recently formed valid pullback is that one, and now the low of that pullback is this one here. And so the liquidity resting below that low, which we call sell side liquidity, now that's what we call the inducement right here. So that's the inducement, the liquidity resting below that low, that's what we call the inducement, and that is in the bullish scenario. So now the real question is that a major inducement or a minor inducement? Stick with me because I'll be explaining that later in this video. So what about in a bearish scenario? Alright, in a bearish scenario, it's literally the opposite of what I have discussed in a bullish scenario. Right here, in a bearish scenario, inducement, abbreviated as IDM, is now the liquidity resting above. You can clearly see that this is the opposite of the bullish scenario, exactly right there. On the bullish scenario, it was below. On a bearish scenario, it's now above the high of the recently formed valid pullback on an impulsive move. Exactly the same. Once price has taken out the inducement, I said this here. Now this is a bearish scenario. That's the reason as to why you can see this here is a swing point low and that's a swing point high. Alright, so right here, once price has taken out the inducement, you can clearly see right here, price reversed or retraced and took out the inducement. So this one here is now a confirmed swing point. And so now if price reverses again and breaks past the swing point low, then this one here is a confirmed bearish break of structure. So now what is, or how can we mark the inducement? After the break of structure, we all know that we are currently in a new trading range as well as a new impulsive move. So this means now our trading range or our impulsive move ranges from that low, I mean this high, and currently ending at this low. Alright, so now let's identify the inducement. Alright, so right here we can clearly see our impulsive move, and we can clearly see also from the definition we said it's the liquidity resting above the recently formed, above the high of the recently formed valid pullback. The keyword here is valid pullback and impulsive move. So we have identified our impulsive move, and the recently formed valid pullback is this one here. So the high of that recently formed valid pullback is obviously that one, and now the liquidity resting above that, which is buy side liquidity, is now called the inducement. So this one here, this buy side liquidity, is now called the inducement. I have said that I will explain if it's a major or a minor inducement. So let's dive into it. So we can clearly see this one here is the inducement in general, and inducement is now divided into two, and that is the major inducement and the minor inducement. So now what is the difference between the major inducement and the minor inducement? The major inducement occurs after the break of structure or BOS. It it doesn't matter. It can be a bullish break of structure or a bearish break of structure. The context here or the keyword here is actually after. It occurs after the BOS or the break of structure. And now the minor inducement is literally the opposite. It occurs before the break of structure. So now with this context, now we can get back to our examples above here. Exactly right here. So now with that, or with knowing that, is this now the minor inducement or the major inducement? This one here is the minor inducement. Why? Because we said the minor inducement occurs before the break of structure. Right here on the definition, we say that the minor inducement occurs before the break of structure. So coming up here, we can clearly see that the break of structure was right here, and this pullback occurred before price created the break of structure, or before price broke past this swing point. So this one here is the minor inducement, and now the major inducement occurs after the break of structure. So this means now price needs to fail the minor inducement. By failing, I mean price needs to actually not take out the minor inducement and create another recently formed valid pullback. In that case, I mean price needs to create another pullback without taking this one here, without taking the minor inducement. Then price decides to create another pullback. Now, once price creates another pullback, this pullback here is created after price has already broke past our swing point high, or after price has already created the bullish break of structure. So this means now this liquidity or this sell side liquidity resting below this low is what now we will be calling the major inducement. Again, if price creates another pullback without taking this without taking this initial major inducement, then the major inducement will be shifting to the newly formed, this one here is the newly formed value pullback. So this one here will no longer be our major inducement, but then this one here will be now our major inducement, because I said the word recently here is a keyword. It needs to be the recently formed valid pullback. All right, so that's a bullish scenario, and the same also occurs in a bearish scenario. So when we go into this bearish scenario, exactly right here, you can clearly see this is a minor, and so if price creates a pullback down below here, if price creates another pullback here without taking out this minor, then this one here will be now the inducement. And since that's the inducement, now we are to identify if it's a major inducement or a minor inducement. This one here is a major inducement because it occurred after price created that break of structure. So this here is the major inducement, and this one here is not the inducement because it is not the low of the recently formed valid pullback. But this one here is the low of the recently formed valid pullback on that impulsive move. And the liquidity resting above this high is what we call the major inducement because it occurred after the bearish break of structure. And so let's have a real quick chart example. Right, on this chart we can clearly see that price retraced exactly right here and took out the major inducement. We said once that happens, this one here is a confirmed swing point, and so if price reverses and breaks past the swing point, then this one here is a confirmed break of structure, and we can clearly see price did that. This here is now a confirmed break of structure, and we are currently in a new trading range as well as an impulsive move. The impulsive move ranges from that high all the way or currently at this end. So we said after identifying your impulsive move or your trading range, the next step is usually marking the inducement. So exactly right here, we can clearly see that this one here is the recently formed valid pullback. And since this one here is a bearish scenario, then the high of this or this buy side liquidity resting above this high of the recently formed valid pullback is what we call the inducement. So the question is this a minor inducement or a major inducement? We can clearly see that this pullback occurred before price broke past our swing point here, or before price created the bearish break of structure. So this means this inducement is a minor inducement. But let's say now price created this pullback after the break of structure. Now the liquidity resting above that high will now be the major inducement. So now let's run price and see if price ends up taking out the minor inducement or creates another valid pullback, so that we can now shift to the next and the next until we get the correct inducement in the trading range. All right, so right now let me run price, and exactly right here we can clearly see that price created another pullback. Exactly right here, this one here is the other pullback, and also it is the recent one on our trading range or impulsive move that ranges to that high and currently ending at this low. So this means that the inducement is no more where it was initially, but now it's right there, because this one here is the pullback high, a valid pullback high, and we say the liquidity resting above here is what we call the inducement. And now in this case, is this a major inducement or a minor inducement? This here is now the major inducement, because this pullback occurred after the bearish break of structure. And we said if the pullback occurs after the bearish break of structure, and it is the recent one, then since this is a bearish scenario, so the high of that pullback, the buy side liquidity resting above that high, that's what we call the major inducement. And so since the keyword here is recent, this means if price creates another valid pullback here without taking the initial one, then we will be shifting from where it was to the current created one. So let's see. All right, this one here is not a valid pullback. I mean, this is not a valid pullback. So let me continue running price. And exactly right here, I can see price is retracing. All right, price right here created another valid pullback, and so the valid pullback high, that's now our major inducement. The reason as to why it's a major inducement, because they are occurring after the bearish break of structure. So right now, if price creates another pullback, I mean a valid pullback without taking out this one, then we will be shifting also to the next. And exactly right here, we can clearly see that price created another pullback without actually taking out the initial one. So this means that our major inducement shifts to this one here. And so also, not until price takes out this one, I will not confirm a break of structure. This means if another pullback is created, I will also be shifting to the newly formed pullback high as the major inducement. All right, so let's see in this scenario, and exactly right there, we can clearly see our major inducement is now taken out. So this means now this low right here, I mean this low is now a confirmed swing point, and if now price reverses and breaks past that after creating its ultimate retracement, if now it reverses and breaks past this one here, this low, then that's a valid break of structure, and will now be in a new trading range as well as an impulsive move, and the process recurs or the process repeats. All right guys, so I don't want to make this video long, so if you learned something, drop a like, and if you're yet a subscriber, subscribe, because I assure you a lot great content is coming ahead. So guys, see you in the next video.